This voice is taken from an article with the title, How Do Changes in the Manufacturing Sector Impact the Economic Calendar?, which has been published on TRADERTALKSNET. Changes in the manufacturing sector can have a significant impact on the economic calendar, as changes in the manufacturing sector can affect multiple economic indicators. Manufacturing data can provide insight into the health of the economy, as it can help to gauge the level of economic activity and the level of demand for goods. Manufacturing activity is often seen as a leading indicator of economic performance. As such, IT can help to predict how the economy will perform in the future, and can be used to gauge the strength of the current economic cycle. Changes in the level of manufacturing activity can also be used to predict changes in other economic indicators, such as GDP growth, inflation, and employment. Manufacturing data can also be used to assess the impact of government policies on the economy. For example, changes in fiscal and monetary policies can affect the level of manufacturing activity, and the data can provide an indication of the effectiveness of these policies. Changes in the manufacturing sector can also have an impact on the economic calendar by providing an indication of the level of consumer demand. Changes in consumer demand can be used to predict changes in prices, wages, and her economic indicators. As such, changes in the manufacturing sector can provide insight into the impact of economic policies on the overall economy. Changes in the manufacturing sector can also be used to predict changes in the foreign exchange market. Changes in the level of manufacturing activity can indicate changes in the demand for a particular currency, which can impact the exchange rate. A decrease in the manufacturing sector could lead to a decrease in the demand for a currency, which could lead to a decrease in its value. Finally, changes in the manufacturing sector can also have an impact on the stock market. Changes in the level of manufacturing activity can indicate changes in the demand for certain stocks, which can affect their prices. A decrease in the level of manufacturing activity could lead to a decrease in the stock prices of certain companies, while an increase in the level of manufacturing activity could lead to an increase in stock prices. In summary, changes in the manufacturing sector can have a significant impact on the economic calendar. Manufacturing data can provide insight into the health of the economy, and can be used to predict changes in other economic indicators. Changes in the manufacturing sector can also be used to assess the impact of government policies on the economy, predict changes in the foreign exchange market, and influence stock prices.